Welcome back. I'm Pratap here. Today is 24th April 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Yesterday, we identified 7 high liquidity zones. Out of that, one stock we got profit, that is POLYCAB, and 3 other stocks, prices came and they gave a very good return, but we can't take those trades. You know the reasons. But anyway, we will discuss them in detail. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available in our NeoStock YouTube channel. I kept all the videos in a playlist, Supply Demand Zone Price Action course. I also provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis of the high liquidity zones generated in our yesterday's report. So as I told you, POLYCAB is the one we got a profit. It is a daily high liquidity supply zone. POLYCAB is a daily high liquidity supply zone. So this is what our software has identified. We have a drop, 1, 2, 3, 4, 5 base candles, again a drop candle. So this this daily supply zone we have fine-tuned to until 5 minutes time frame. So first we need to fine-tune to the 75. How I fine-tuned? Let me show you. See, a lot of order flow is there, so observe very carefully. The way how I am observing such kind of observations, you should also make to identify the proper order flows. Here we have multiple 75-minute zones. We have a rally, 3 base candles and a drop candle. This is the way you can consider. This is also a medium size rally, 2 base candles and a drop. Either way is valid. It doesn't make any difference. You get the exact zone. And the next one is again we have a rally candle, base candle and a drop candle. And again here you have a drop, 3 base candles and a drop candle. Or rally, 2 base candles, drop. Either way you can draw. So total 375 minutes high liquidity zones were identified. And if you look into these two, they are LOTL 75-minute zones. Anyway, our interest is on fine-tuned 5-minute zones, right? So again, from 75 minutes, let's move on to the 15 minutes and we will fine-tune inside the 75-minute zone. Inside means overlap. So here we have a rally candle, 4 base candles and again a drop candle. This is the 15-minute zone we identified. And here 2 zones we identified. We have a rally, base, drop, again drop, 2 base candles and a drop candle. And here within this 75 minutes, actually there is a overlap at the distal line. See here rally, base, rally. At this distal line it is overlapped. So these are the 15 minutes levels what we identified. Now let us fine tune to 5 minutes levels. Here you have a rally candle, base candle and a drop candle. Maybe some of you may not fully convinced with this. Some of you might be having doubts also, because a lot of price action here not really good, which might disturb us. If anybody is having discomfort, just leave it, that's it. No issues. See, always remember, whenever you feel comfort, plan trades in that only. The areas where you are having discomfort, leave it. Sometimes it may work, but you should not feel about that. But there is an opportunity for us. So many times, what happens when you have such kind of consolidation, it doesn't give. But the point you need to understand, it's not a huge consolidation. Because it is a 5 minutes time frame, at least more consolidation should be there. Here you have seen some swings. We have a swing here and then moved. Got it? But here considerable size is there. So that is the reason why there is nothing wrong in accepting this zone. If I remove, you will get clarity. See here, this is a leg candle. Clearly it is visible. It is a leg, maybe small size leg candle. Among the medium size candles, this could be the smallest one. That way you can assume. And this is a base candle and this is a drop candle. You have a follow through candle. And why I have shown some interest, that also, see, we have some doubts, even I have some doubt here. Consolidation, still why I gave the preference. Can anybody find the reason? You have a reason on the chart. The reason is clearly visible. See, by looking into this order flow, you will be having a doubt, lot of consolidation took place here. Do we really need to accept this zone? Or better to reject such kind of doubts? I will also get, not only you, I will also get. But what I will do, I will look for some price action clues before I confirming that. If the price action clue is not there, definitely maybe I would have rejected even this zone. No doubt in that. Because I have doubt. Okay, we have a rally based drop, is there? No doubt. But the price action earlier is not good. Then look for the price action after that. Are there any clues available? Immediately next candle there is a clue. See the price, at one point of time prices were moving up, about to reach this. Just before reaching, see the rejection, huge rejection. That means there is a very strong order flow in this area. Then how to plan the trade? The place where it is rejected, you just draw a horizontal line. Maybe you can draw a horizontal line like this. A little above, close to this zone, maybe with some entry buffer, with some entry buffer, prices you can plan, because prices may reach here and come down, or before reaching to this zone, it will come down. But make sure, be ready with your, entry buffer. This rejection, this is not a small rejection, huge rejection. After that, see the fall from here. That means there is a strong order flow in this area. That is the reason why it is a good zone, very good zone. Many times, because of the consolidation activity, we don't give prefer to this zone. But we have a clear price action clue after that. That clue indicates institutions really set up a strong order flow in this area. This is how you should analyze your charts. It's not just drawing the zones. Observing the price action before, observing the price action after. Based on that, you need to take a decision when you have some doubts. This is the kind of level of knowledge you should build. What was our last training session? It's all about rejections. You all attended the rejections concept. Of course, rejections helps us in identifying the aggressive trades. But this is a fine-tuned zone. Fine-tuned zone with rejections, definitely it is a powerful, no doubt in that. Remember, this is not aggressive. I just, for your clarity, I brought 15-minute zone down. Now let me place this 15-minute zone exactly. Where is that? Control Z. Yeah. See, this is the 15-minute zone. Inside the 15-minute zone, you have a fine-tuned zone. From the middle of this 15-minute zone, huge rejection has come. That means this fine-tuned area, definitely strong order flow will be there. From where the order flow will start? Just above this rejection it will start. From here the rejection is started. Maybe if the demand is strong, prices may penetrate more deep inside and it may reach this zone and come down, or just before reaching the zone also prices may come down. But anyway, we use entry buffers. Such kind of situations, people should be more alert using the entry buffers. And even if you add the entry buffer, the risk is within your limit only. Because this is a very small risk area, the fine-tuned area. Nothing wrong in adding some entry buffer. That way you can plan your trade. See how the rejection made our entire analysis, how it changed. If you don't look into this candle, if this is your candle, let us assume this is the picture. Let me hide that candle. Yeah. Assume this is your picture. If this is your picture, if you ask me, can you prefer a trade? Definitely I have a lot of doubts in my mind. Because a lot of consolidation activity. Of course, some swings are there. That is a favorable. But that is a small swing. Not significant. If it has come down and came up again. But this swing is within the narrow range only. This is actually a narrow range area. Look into the blue color line, what is already drawn. That just above that, see the price action. Prices moved in a narrow range a lot of time. That means many of your institutional pending orders flow might have been consumed. But the point you should understand, here we have a rally candle, base candle and a drop candle. But this rally base are also, this rally candle is also not significantly great candle. It is okay candle, okay. Okay to draw the zone, but significantly not great to overcome this consolidation. This is not great. You may get definitely you may get a feel. This is also part of this leg candle is also part of this. There is a base candle. Really institutional order flow is there or not? Definitely 100 doubts will be there in our mind. Not only you, even I also will be having those 100 doubts in my mind. But how to confirm? The confirmation is only based on price action clues. If there are no price action clues, with the doubts, better not to take the trade. Avoid this zone. If you have doubts in your mind, it may work. But for us, 100% confidence should be there. Not with like 50-50 chances, such kind of trading we should not do. Whatever the trade we do, we will do it with 100% confidence. Yes, this zone will work. Maybe it may fail, but you should have confidence at the time of taking trade. If it fails also, you will accept, because always you minimize the risk. At the time of failure, what happened? Your loss is always minimal. But at the time of profit, at least we get 3 times or 5 times or 7 times or 10 times profit you will get. Depending on the place where your 15-minute zone is there. If 15-minute zone is beyond your 6% ROI, probably you may get 1:10 RR you will get, or 1:7 RR you will get many times. If the 15-minute target is very close to your entry zone, mostly minimum RR you will get 1:3 or 1:4 or maximum 1:5. It's all depending on how near your 15-minute target zone is from your entry zone. That way we get our profits. You all know these points. So definitely I would have avoided this zone. But what put me in attention? What made me get more attention? This candle. Exactly the last session I explained. What is our last training session? I don't know how you people are concentrating when you are learning your concepts. The rejection, huge rejection. Not only the rejection, after the rejection you should also look into the price action. There is a big rejection, again prices came and moving here and here, you should not consider that rejection. But here the rejection, after that the price action, you have to observe. There is a big push. And then one more candle, very big push, one more candle. And see what happened to the prices after that. So this is not a normal rejection. This is a clear confirmation that there is a strong order flow in this area. Just above the rejection, there is a strong order flow till this 5 minutes fine-tuned area. See today what happened? Prices came close to this 5-minute zone. Maybe few paisa before it reached. See here. Even then the rejection, see the rejection after that. Definitely you would have placed your order maybe somewhere here or somewhere here. Within these areas, definitely you would have placed your order. Maybe the best case means you would have kept here your order. Why I am saying best case? If you would have placed your order, you would have got the maximum profit. Or a little below. You would have got the maximum profit. Your order definitely would have executed because prices went beyond the blue color line. Still you will keep because you have an option to keep up to 0.1% buffer. Some people might have kept their orders like this, depending on your risk management. How much gap you are giving, that is all depending on your risk management. Maximum gap you will give. Maximum gap means maximum buffer, what I mean to say. 0.1% from your entry. And after that prices came down, and finally just before the closing hour it reached. Maybe you would have exited somewhere here. I agree. Because market is near to the closing hours at this 5-minute zone. I am sure most of you might have exited here. I am 100% sure. This is the place you might have exited. But for me, where you are exited is not important. How much opportunity it has given. That is what we are calculating. Basically, we are calculating the power of the high liquidity. So what is the maximum profit you can get? That is what we are mentioning. But that is only maximum. But not beyond you can't capture the profit. Because this is the 15-minute zone. So you have a rally, base, rally. So this is our 15 minutes target. Rally, base, rally. So definitely this is our 15 minutes target. Last minute, 1 minute before closing the market hours, it reached the target. At 3:28 candle, it reached the target. But definitely you can't wait till that time. I agree with that. So as I told you, at 5-minute zone you would have exited because market is nearing to the closing hours. Maybe in this candle when at 3 o'clock, 5 minutes. Cash traders are probably intraday traders. But those who have taken intraday margin, probably you should exit at 2, I think around your brokers will allow up to 245. Maybe in this candle you would have exited. Somewhere here you would have exited. If not, if you missed one of these candles, you would have exited. Anyway, how much profit you got, that is a different story. But how much opportunity this stock has given. So it has given around 35 rupees or 36 rupees profit it has given. 37 rupees, 37.55 is maximum profit. So 100 is the lot size. That's why 3,755 rupees is the profit you would have got. This is a 2.9% ROA as per one futures margin cost. Okay, profit compared to your average. Your average is 6%. But this month many stocks has given less ROA. Why this month? Maybe this could be the elections period. That could be one reason. And the global situation is also not good among the countries near the Middle East countries. People are having fears. Maybe because of all these reasons. Reason whatever it is. We don't care about the reasons. But this month the overall average intraday margins has been down. That is what we have to accept. Clearly we see in the month of April, month of April, it's highly difficult to cross 6% ROI. See 4.1, 5.3, 2 point, here negative ROI, stop loss hit, 2.9. This is the one crossed, our average ROI. Again 3.6. These are all the failures, 3 failures. On the same day, only 1 profit we got. And these failures are because of the fear on the war between Israel and Iran at that time, on that day. And again you see here, 3.7. This is one stop loss hit. So this month we have seen good number of losses. I think this is all 3 on the same day, 12th, 12th, 12th. This is also due to the fear of the war on that particular day. But few stocks has given good ROI also. See, this is extraordinary. Navin Fluorine has given, see, 30% ROI it has given. Today also Navin Fluorine might have given similar kind of ROI, but we won't take that trade. Why? We will discuss. Few stocks crossed, but many stocks on average you see, they are not crossing beyond. This is the one crossed, but see the other ones. They are not crossing 6%. Again here it gave a good profit, but see the other stocks. Why this is happening like this? Because of the situation. But anyway, ultimately maybe our average ROI is down this month, but our profitability is continuing, the high liquidity zones. At the end of the month, during this month, how much success rate have we achieved? That 80% success rate we will measure at the end of the month. Definitely this month our average ROA is 6%. It's very difficult to achieve that. We have to accept the fact. But whatever it is, profit is a profit. We have to accept. Always you should remember this word. Profit is a profit, whether it is small or big. But only thing is achieving our goal. This month definitely there is a break probably until this elections completes. We see not much momentum in the market. Again after the elections, hopefully everything will be normal again. Okay. So this is the only one stock we got, but 3 other stocks also prices entered into the zone and they gave a very good return comparing, but we can't take those trades. So let us look into them. But remember how to take decision sometimes. That is very important. How I took my decision? Because of rejection. The next candle helped me to take a decision that this zone is having a strong order flow. You got the point, right? And from here to here we have around 3.5% RR is there. 3.5% RR. Okay, this is about POLYCAB. And did I explain the fine-tuning of the remaining fine-tuned zones? Okay, this is the one about our trade. And here within the zones we have fine-tuned. We have a drop candle, 1, 2, 3, 4, 5, 6 base candles and a drop. Here we have a 5 minutes fine-tuned zone. Here we have a rally, 3 base candles and a drop, another fine tune. And here also you have a rally, base, a drop. This is another fine tuned zone. 5 minutes fine tuned. They are the real order flows according to us, according to our strategy. Okay, and what else? Today we got the trades but we couldn't take. We have Navin Fluorine. See, Navin Fluorine, how much profit it would have given. But we can't take this trade. We can't take deviations. First of all, this is a daily high liquidity supply zone. we have this is the leg-in, 2 base candles and a drop candle. This is the daily high liquidity supply zone. This again fine-tuned with 75 minutes time frame. We have identified 2 75 minutes order flows. One is a rally base drop. This is the recent price action in this zone that created the zone. Here also we have rally base drop. This is LOTL. See, rally base drop, almost the same, the LOTL zone. And again we have a drop base drop. This is another 75. We have identified 2 75 minutes. That we need to fine tune with 15 minutes time frame. We have a rally base drop. Rally base drop. This is the 15-minute zone. And again here also we have a rally, 1, 2, 3, 4, 5 base candles and a drop candle. This is another 15-minute zone. But this 15-minute zone is testing multiple times. Maybe, I don't know, it could be a high liquidity zone. We have to assume, but it's not a confirmation. So multiple times it is tested, but in the recent time, any test, we need to check that. No, prices didn't went in the recent time, but this is the only thing. But here, one interesting point we should observe in 5 minutes time frame. So let's get into the 5 minutes time frame. Observe carefully. Okay, first let me explain. This is a rally, 5 minutes, 1, 2, 3, 4, 5, 6 base candles and a drop. This is the 5 minutes order flow we have drawn. And here multiple times prices are entering and coming down, entering, coming down, again entering, coming down. Maybe, we may assume this could be a high liquidity area. That's why it is supporting multi-testing. That is just one assumption. But see here, we have a rally, we have a base candle, we have a drop candle. Why? See, very small 5 minute zone, teeny zone. You know what is the gap? 25 paisa gap. The depth of this zone is only 25 paisa. And that too, see, this is a 3,426 rupees level, the price of this particular, at this price. So 25 paisa for 3,000, over 3,000 rupees stock means 25 paisa is a negligible price, very negligible. That a teeny zone, very teeny zone. Okay, why it made me focus on this zone? Let me tell you. See the high of this candle, this rally candle. The high of this candle is 3425, 3,425. See the high of this candle. Again 3425, 3,425 rupees. Again high of this candle, see. 3,425 rupees. Again see the high of this candle. 3,425 rupees. See, in all these candles, 3,400. That means 3,425 rupees, some magic is happening. Okay, then I got, maybe in just above, is there any 5 minute zone before I want to explore within this area? But I haven't seen any zone. Maybe there could be a possibility, definitely 1 minute zone will be there here. Actually, that is the main reason. That 1 minute zone, probably a strong order flow is there. That is holding the prices exactly here. See, one candle, two candle, exactly same price. If prices reached and coming down, we can assume maybe it is a just coincide. But here, continuously 4 candles, same price, 3,425 rupees, pushing the prices means there is a heavy order flow in that area. So I wanted to check in the 1 minute, but unfortunately, few days before, 1 minute data is not available to me. Probably until this candle or this candle, 1 minute data is available in my chart, and before that 1 minute data is not available. So I couldn't find. Okay, then what I am doing, maybe in this area, in this 25 minutes area, we can draw stop buffer, maybe we can extend. we can extend a more. That way we can plan a trade. That was my idea. But see, after that what happened? There is one more time. Prices entered into that area. See the high of this candle. 3,425 rupees again. See the high of this candle. 3,424.55. That means just 45 paisa before it came down. Again see the high of this candle. 3,425 rupees again. That means 3,425 rupees, how it is holding the prices. That's why I have drawn this tinny. But today whether prices reach up to this area, we don't know. Okay, at least what we can do, we can extend this zone. For that we have a zone here. Newly created zone. Again, you can draw a zone like this 5-minute zone. And again prices entered and captured the order flow from here. So taking a trade at this level, is it advisable? Maybe advisable if it is because it is a high liquidity zone just above. But what was the plan? Instead of taking this, because already prices captured here, probably we can plan a trade just above this. See how we have seen POLYCAB earlier? Because of this rejection. Maybe within this blue color area, till this, we can take an entry here in this blue color area, or maybe a little before, and we can go. But unfortunately, what happened today? Prices went up to that level. Just 15 minutes zone itself it reached. They didn't go. It is a little shortage. Because there is a little shortage, we missed the trade. If anybody would have taken exactly at this 15 minutes, definitely you are a lucky person today. Because your fine-tuned zone is a little above, maybe that is a high liquidity zone, a strong area, and a small price, 25 paisa, such kind of zones, many times we may miss the trades. That possibility is also there. So not to miss the trade, we drawn this level, because the order flow was consumed already up to this blue color area. So near the blue color area we can take, but maybe slightly missed. How many rupees? Here it is 3422, sorry, 3,422.60 paisa. And here the high of this candle 3419, 3 rupees 60 paisa. If anybody would have added 3 rupee 70 paisa buffer, at least a minimum, you would have got a trade. You would have got a trade. Very good trade. Extraordinary profit you would have got. But anyway, as per my analysis, the prices slightly missed in reaching. Maybe this is not a trade for me, for my point of view, as per my analysis point of view. But if anybody would have taken a trade, definitely it would have been a very good profit for you. Definitely you would have got over 10% or maybe even more, 15% ROI you would have got. But anyway, I didn't calculate roughly by seeing this price I am telling. Or it could be even more also. If anybody calculated how much ROI we would have got at least up to this. Maybe you can put them in the comment section so that we all know how much we would have missed it. As per one futures margin cost, please calculate. Okay, this is Navin Fluorine. Anyway, it is a missed out trade. Why we are accepting multiple? Because this is the teeny 25 paisa zone is a high liquidity zone. That could be the reason why we are planning. But not because of this particular previous price action. In the previous price action, if you draw a zone, 5-minute zone, rally, base, drop, this is already tested one. That's why we can't plan a trade. But little above there is a high liquidity area is there. A teeny area. Probably majority of the institutional order flow is there. Maybe by seeing that order flow, many people might have kept the orders at this area. Because already a strong order flow is there. Just before so many people would have placed their orders here, heavy orders. That's why just entering into the 15 minutes zone, it entered into the 15 minutes zone and then immediately came down with a huge rejection and prices came down. Okay, this is about Navin Fluorine, the trade what we missed, and another one is HDFC Bank. Definitely we will avoid this trade even though it is a very good profit. HDFC is a high liquidity daily demand zone. Let me change it to daily time frame. See, here we have a rally, base rally with hidden body. How we fine tuned? Let me explain. Sorry, not HDFC, sorry for my mistake. It is a Dr. Reddy. Sorry for my confusion. It is a Dr. Reddy. Dr. Reddy is a demand zone, daily demand zone, high liquidity demand zone. This is the one rally, 1, 2, 3 base candles and again a rally candle. How I fine tuned? Go to the 75 minutes time frame. We have a drop candle with the hidden body. This is a drop candle. We have 1, 2, 3 base candles, again a rally candle. So this is the 75 minute zone. And moreover, we have already drawn this zone earlier. If you would have looked into old videos, I already explained how to fine tune. Because this chart was already there in my earlier drawn fine tuned this zone. But what is it, the one we drawn recently? This is the one. I mean, yesterday what I have drawn is these zones. Because there was a recent price action into this zone. Prices didn't reach, but they created a new 75 minutes inside the daily. So we have a drop candle, we have a base candle, we have a rally candle. This is 175 minute zone. We have one more 75. We have a rally candle, we have a base candle, again with a hidden gap there is one more huge rally candle, high explosive rally candle. So this is the 75 minutes zones. So these 75 minutes we need to fine tune with 15 minutes. This is the 15 minute zone. This one I already explained how to fine tune, but anyway, let us discuss once again. We have a drop, base, rally. We have a 15 minute zone here. Inside identified 5 minutes also, okay? Anyway, now our focus is on 15 minute zones. We have another 15 minute zone here. We have a drop candle, 1, 2, 3, 4, 5. 5 base candles and again a rally candle. And again a rally candle, 1, 2, 3, 4, 5, 6 base candles and again a rally candle. This is the 15 minute zone. So total 3 15 minute zones. This is the one, the one already we drawn earlier, total 3. Now we need to fine tune with 5 minutes time frame. Earlier how we fine tuned? This is already fine tuned zone earlier itself. We have a rally, 2 base candles and a rally candle. This is the one we drawn earlier. And here, observe carefully. See here in this 15 minutes area, we have multiple order flows. We have a drop base rally is there. We have a rally base rally is there, but why I didn't draw? This is already tested here. So we don't bother about that. And here again we have a drop base rally. This is the another order flow. Again rally base rally, another order flow. Again here we have a drop base rally, another order flow. Or in case if you are, you can also consider this rally, 2 base candles and a rally. This is not a drop, I'm sorry. This is the one, rally, 2 base candles and a rally. See how prices entered into this zone and already consumed. This is not today's session. This is Friday, 19th April. So this zone is already tested. So for today's trade, definitely we can't plan a trade in this zone. Even if you want to consider this as a drop-based rally, compromise this leg-in, still if you want to draw, this is also tested. See here. This one is also tested. Either way, you can't plan the trade. Even if you compromise and draw the zone, still it is already tested. So tested zones we can't, because every time if you have started planning, taking trades from the tested zones, once or twice they will work, many times they will fail. Unless this is a high liquidity zone. We don't know it is a high liquidity zone. You may say there is a huge rejection, can't we plan because we have a price action clue? Can't we plan second trade? But prices already went deep into that. Because of this rejection you can't. Maybe this rejection is, the order flow is very strong, but already majority of the order flow would have been consumed. By the time supply has weakened, that's why the rejection could be very strong. That way also you can think, right? But whatever it is, prices already went deep inside. And if you have multiple rejections, probably we can consume. This is the high liquidity area. Definitely this is the only one candle is there. Definitely you can't plan a trade in this zone because we don't know how strong the order flow is. But see today what happened? Prices again entered into this zone and again it moved up. Again closing hour also prices came. Again once again it moved up. This is morning 950 candle and this is at 235 candle. That means strong order flow. Now you may assume maybe this is the area, some strong order flow is there, maybe this could be high liquidity area, maybe, we don't know. But anyway, definitely this is a missed trade. Why we missed? Because of the rules that is against to our strategy principles. Just because today we missed, if you start taking again second trades from tomorrow, maybe they all will fail. We have seen several examples earlier. The zone is tested, second time the zones are failed several times. That's why we want to take 5-minute zone should be fresh. Remaining zones can be tested, no issues for us. The fine-tuned 5 minutes should be a fresh zone. If the fine-tuned 5 minutes is a high liquidity zone, then we can plan multiple trades. But how do you know it is a high liquidity? Either software should tell us. Okay, software is not available for us every time at this point of time. So what is the other alternative? If multiple tests are happening, based on that we can assume. That assumption could be 80%. It might be correct. There are few scenarios, multiple tests also they are not high liquidity. There are few special scenarios. That is a rare situations. So that is the reason only software can identify that. But at least 80% we have guarantee that could be a high liquidity zone, based on several tests, maybe 3 times or 4 times. If it is testing from that zone, we can assume. See here it is already tested once. And today second time, third time, this is the fourth time. Almost came very, this small just before it's moved up, you can neglect that. Fourth time. That way you can assume. Maybe this could be. But because already tested these times, next time is it going to work? That guarantee is not there. That is the problem. How many times high liquidity will continue its testing? We don't know. One day it will fail. Until it fails, it will work. That is the only thing we know. That's why people who wants to take additional risk and want to take trades, those people only can take after third time or fourth time. If you identify a fresh zone, you identified it is a high liquidity zone. Maybe at least without any fear, some 2 or 3 times, you can take the risk and accept multiple testing. If it is a 5 minutes high liquidity, please remember, not 15 minutes high liquidity. In 15 minutes high liquidity, if you want to take multiple tests, the 15 minutes level zone should be keep on creating new 5-minute zones, fresh zones. Otherwise, you have to doubt that zone. Like fine-tuning technique. That is nothing but fine-tuning technique. Okay. Anyway, Dr. Reddy, we missed this opportunity because it is a tested zone, but it worked today. And what is the other one? Navin Florin we discussed, and LIC housing. LIC housing we cannot take a trade. This is a daily high liquidity supply zone from the year 2017. See, this zone is created in June 2017. So we don't have data for fine-tuning this zone. We don't know how it will work or not. Today prices came deep and after that it came down. But without fine-tuning, how can we plan the trade? Without data, how do we know the quality of this zone? Because we have all this data related not availability, we can't plan a trade. Because prices came and came down, we might think, okay, use opportunity, we missed it. Because it happened, but okay. But what we need to find a fine-tuned zones, a fresh fine-tuned zone. See, Dr. Reddy, there is no fresh fine-tuned zone. That's why it is already tested. That's why we just avoided the trade. But it worked. That is a rare situation. Please remember, it's a rare. There could be other reasons why worked. Fine-tuned zones worked second time or third time. Exactly the same way here, data is not available. Because data is not available, we cannot. If you go to 75 minutes, any new 75 minutes zone created here? No. If it is any new 75 minutes zone is created and inside a fine-tuned zones are available, next time in the retracement we can plan the trade. But that possibility is also not there. Or is there any price action clues, aggressive trades point of view? No zones, no 15-minute zones also to plan anything aggressive trades point of view. Or is there any high liquidity zone multi-testing point of view? Let us check. Same zone again and again it is tested. No. There is a zone rally base drop, only once it is tested came down. But if you see, maybe there is a strong order flow here. Just before entering itself, zone, just touched the type 2 proximal. But anyway, type 2 proximal is tested. We can't take even second time trade also. See, this is the way you should try to analyze at different time frames. 75 is not there. Is there any aggressive trade opportunity is there? That is also not there. Is there any high liquidity 5 minutes opportunities are there? At least multi-testing from the same zone. You may at least feel maybe can I take a chance again in that zone. That kind of mindset you can analyze the charts. But anyway, it is quite risky taking trades once a 5-minute zone is tested multiple times. It is purely luck-based trade only, please remember. So these are the stocks where we got opportunities but we couldn't take the trades today. And remaining stocks prices didn't reach, but let me show you quickly. Dr. Reddy, we discussed Gujarat. I'm not going to explain fine-tuning of this zone for Gujarat gas because yesterday only we discussed. If you want to know how we fine-tuned this zone, where is the zone? Trading view is very slow. This one already we discussed yesterday HLQ analysis. I explained how I fine-tuned. Please refer yesterday's video. And same is the case for HDFC Bank also. HDFC Bank also daily high liquidity demand zone. Today prices did not enter into the zone. See here, this is today's candle, this is yesterday. Yesterday I explained. So please refer yesterday HLQ zone analysis so that to know this. And moreover, this zone is already tested. Yesterday I told you prices came deep inside, so we can't prefer a trade. Look into the yesterday's video. LIC housing 2017 just now we discussed. Navin Florin we discussed. POLYCAB we discussed. And Sun TV is the last one, that is the pending one. Sun TV is a daily high liquidity supply zone because yesterday we didn't have any 75-minute zones. both demand and supply zones from yesterday's list. So this is the ERC candle, leg in, 3 base candles and a drop with some hidden body. This is what we did, this is what the zone identified. And what we did, this zone, I don't know, earlier we discussed this or not. This is the 75-minute zone we identified here. We have a rally, 3 base candles and a drop candle. So inside this 75-minute zone, again we identified a 15-minute zone. This is the leg-in candle, drop, base, drop. This entire thing is 15 minutes. And next 5 minutes candle we identified inside 5-minute zone, we identified inside the 15-minute zone. We have a drop, 1, 2, 3, 4 base candles, and within this zone area, or even I consider this as a compromised leg candle. That way I fine tuned within this. Otherwise you get almost the same area. Just to minimize that, ignore this candle and drawn the zone from here. This is a risk management point of view. But see, prices never entered but came very close to that earlier ones. Here in this candle, prices came very close to this zone. I think we got an entry at the time by keeping the entry buffer here. I remember, I didn't exactly remember, but I'm thinking. But anyway, this is a still fresh zone, 5-minute zone area. Prices didn't enter. So you can plan a trade in this, but today also prices did not reach. Because prices closed here, maybe today's list also, software may identify this zone. This is yesterday's daily candle. Definitely software will identify this, but other volatility related algorithms also supported. It may identify. Let us check that. So these are the high liquidity zones we identified from our yesterday's list, and we got a very neat and clean trade today. But ROI is not at our expected average ROI level, but still profit is a profit. That is what you should understand. And good number of stocks, we missed the trades. It's not that we missed, we rejected them because they are not following our fundamental principles. Because today, second time they tested, you should not keep this point in your mind. Always remember, second test you have to avoid unless that is a high liquidity zone. If there are any huge rejections from the zone and the good order flow is there, at the time you can take a risk and take second test. That is acceptable because earlier we took such kind of trades. If you look into the 2 months data, 3 months data, fast, we have taken even second test. There was a huge rejection near the proximal line, Prices didn't go deep. So we took a risk and we took second trade. Because of the price action clue, huge rejections at the time. Very huge rejections. But otherwise, avoid this second trade in any zone. That is against our principle. 5-minute zone, a fine-tuned 5-minute zone should be a fresh zone. That is the success for getting 80% success rate for our stocks within the high liquidity zones. If you did not understand high liquidity zone strategy properly, please refer lesson 21.3. I clearly explained in lesson 21.3.1 video. Okay, this is about high liquidity zone. Hope today you had a very good learning from the POLYCAB trade. The zone that is having doubts, but still we confirmed there is a good order flow by using the concept rejection that you learned in the recent training lesson. The last training session that is currently available to you in our training videos is rejections. The recent concept only is helped you today in getting the trade. If you missed today's trade, POLYCAB trade means you are not attending your training lessons properly. You have to admit that fact. I clearly explained rejections concept in detail. Because I have observed some people are sincerely attending, some people are just, they are attending with fast forward. Don't do that in the training lessons. All these are all money giving you concepts. If you are not in a position to spend half an hour time or 45 minutes or maximum 1 hour time, how do you expect that you get profits? See, everybody wants profits, but dedication won't be there for everybody. That is the problem. If you are the one expecting huge profits, good profits, not huge, maybe good profits, you should have the dedication. Without dedication, this is a money game, right? In a money game, you should be very careful always. That's why education is very important. That is what I am providing in the training sessions and also daily analysis videos. Why I am doing everyday analysis videos? I know some of you people, just like that you learn the training lessons. At least you listen these points, you will realize, once again you go back to the training lessons and you will strengthen your skills. I've been seeing recently some people are doing that. Earlier they didn't give importance to our training lessons. They gave importance to only the reports only. And some of those members, they realized. Now they are seriously attending. How do I know? Because they are only commenting in the comment section. Why they are commenting? Just to help your other members. They are not selfish people. That's why they are sharing their experiences. So that other members also will realize and they will also learn properly. So that everybody will get good profits. So with a good heart, they are sharing their feedback. You have to appreciate them. When somebody is providing such kind of comments, it's not only me, you also should appreciate those members. Because they are helping you with their experiences. Okay, this is the end of the session. And thank you all for attending this session. Let us all meet again in our next video. Have a good day.